Now here I want to take you through the value growth filter, the data mining filter for value growth, which I've found by clicking on here. And again, the names come up based on proprietary criteria that I've set in to here, which help me find the various stocks which I think over a 6 to 12 month period will generate 25% plus on a medium risk basis. And again, you might just look at these and not go through them very actively in the sense of monitoring them daily. It's more for a 6 to 12 month play. What is it that I like about them? Why is it, and how do I come to this? Well, it scans 3,000 stocks, and the things it's looking for is growth in terms of growth for the company, revenue growth, earnings growth year on year, as well as good value based on price earnings growth ratios and so forth. Now again, with the value growth indicator, which has in 2004 generated a 33% return from the stocks that I found in January, which I broadcast through one particular broker's audience. So you can see that it can certainly overperform sometimes. And as I say, it's a good mixture of FTSE 100 companies, Rio Tinto, AstraZeneca, as well as smaller companies. And sometimes on the momentum radar, you'll also find value growth ones, like Alexandra, for instance, and Lookers. You can get an overlap. That doesn't necessarily mean it's more of a buy, but it means that for a short-term and a longer-term perspective, they're both in there. And the added benefit of that is if you pick a stock based on the momentum value indicator, and let's say it drops out of that after 2 or 3 months, it can still be in for your longer-term portfolio. And once again, if you click any of these tables, you've got a lot of other settings which give you a good view of how things have been progressing. If you then right-click, and if you wanted to, and you graph the whole list, not weighted, you just graph the whole list, then you can see in more recent times, since 2003, when value growth has been particularly well, these stocks, and really you should really graph them more recently. And the reason for that is, of course, they may not have been on the value growth radar in 2003. They would have been more recently. And you can see the kinds of returns they would have generated. Equally, looking at the shorter term, since even July, quite sharp rises, and yet they remain in the value growth radar. And that's supposed to give some indication to people of what, had these been in the portfolio from back then, the kind of returns they would have generated. However, more importantly, this is a forward-looking system. So we're looking at this not with a view to how much you could have made, but actually the fact is we're looking to target 20 to 25% plus through medium volatility by picking this particular indicator.